What's going on, everybody? TG here, back with another video. Merry Christmas, everyone. Hope you guys have a wonderful holidays with loved ones, friends, and family. We got a Christmas present today. It wasn't a great one. It was probably the worst Christmas we could have asked for with Alibaba. Alibaba getting hit with an antitrust probe, sending the stock dropping heavily over 17.5% at one point intraday. It's recovered a lot since then, and at the dip, we were able to pick up a lot of contracts. We dropped $18,000 on Alibaba in anticipation that it's going to either stay the same or go back up, which I think is more than reasonable to think, considering the fact that this is an amazing company with some very, very good fundamentals and valuation. Now, I want to show you guys a couple things about Alibaba. First off, let's jump into their PE ratio. Only 29.8. That is an extremely low PE ratio for a solid growth company, especially when you look at other growth companies like Amazon and stuff, which I love as well. But even Amazon is like an 89 PE ratio, which is pretty high. So based on pure fundamentals, Alibaba is an amazing company. If we go ahead and look at their revenue, this accounts for all their revenue for last quarter. They have an amazing e-commerce, the biggest one in China. They also have their digital media, and one of the things I love most, they have cloud computing as well. Cloud computing is a huge growing industry that will continue to grow over the years as cloud innovation continues to advance. Now, they have international commerce as well, and they're very positioned to do well as their IPO, which got delayed, which sent the stock tumbling as well. It's been hit with a lot of bad news recently, but sometimes there's overreactions, and I believe this is a huge overreaction for the company, which is why we put so much money into it, thinking that it will either stay the same or recover. I don't see much more downside to Alibaba, and I also want to show you guys some of their fundamental charts. If we base it purely on these certain valuations, which are very good valuations to do, Alibaba is considerably undervalued as it speaks. Even the first quartile range is 228 for the lowest, the median being 346, and the third quartile being 419. This is just one of them. This is judging by forward PS as a multiple, which is pretty good to look at. Another great thing is forward PE. This is also very good. If we look at this, Alibaba has some significant upside in the next 12 months and is significantly lower than all of these other stocks, these FANG stocks. Another great thing to do to look at. Now, you base it on any of these metrics of valuations, because there's multiple metrics of valuation, and that's why I like that they use this to show that this company is fundamentally undervalued, which is a great thing to see. Based on pure fundamentals, it's not speculation, it's not anything. Fundamentally speaking, this company is undervalued. Now, there is the inherent risk with China, and we've seen that China can have a huge impact on the company. Just look at what happened today. Look what happened a month ago at the Ant IPO. They can impact this stock a lot, but the worst of the worst is already out. And there's a huge overreaction, and usually things sell off much more than they normally do between fear and stop losses. That's a great way to depreciate shares just instantly right there and market value. And as you guys can clearly see, Alibaba's already starting to recover really nicely. We got some of our stuff in the 212s this morning, and we should be looking pretty good on that. So based on these, based on the valuations, this company's very undervalued. It has some very good revenue. I mean, it brings in a ton of money, 155 billion in the Chinese currency. I'll have to see exactly what that is in American currency, but it's still pretty significant. And they're obviously bringing in a lot of money considering the fact that their valuation is that high. Now, another thing I want to talk about is how you guys can play Alibaba and what to do on great companies like Alibaba that get sold off, it pretty excessive for no reason. Now, we go down here, we have a lot of Alibaba plays. We have our 225s for February. These are the risky ones because it's about 225 right now. So that's the risky one. So we didn't add any to that one just to be safe, but we added a lot to these ones down here. We have the 185 ones that we sold one. We have this one, the 215s, which we sold 4 of. If we go ahead and look at that right now, we are down, obviously, down a good amount of money, $832, but we only lose money if it's under 215. So right now we're still good. Even with this giant sell-off, we are still good with Alibaba. And we collected $740 as long as Alibaba doesn't go under 215, which I think it shouldn't because it's a pretty solid company, and this is for March. Now, another one we did is, like I said, the 185s for March, and then we also went a little longer out. April 180s, We did 6 of those. And then we did April 190s. We did 5 of those as well. So like I said, just getting more premium, more credit out of all of these options. Putting up a lot of collateral, obviously, but not as much. We also did 2 10s. We did 4 of these, so we got a lot of premium for this. We got $1,700 in premium for these, as long as it stays above 210 by next September. Okay, we're risking 4,000, but we almost got 2,000 in credit. So we got about 40% return on investment for that. So we're getting a lot of credit for these, and it's not even that risky because we're just saying that Alibaba is not going to drop significantly more than it already has and is probably either going to stay the same or go up. That's a pretty safe bet, and we've also went ahead and did a lot more of these for next year as well. We have, like I said, the Septembers, more Septembers over here for 365. We did 175, and then we also did a 180. So we're basically essentially saying that Alibaba is not going to drop another 20% in the next couple months, and it's going to stay relatively the same or go up, or it can even go down some. It just can't go down a ton. But I figured based on pure valuations and fundamentals, it's almost impossible for this stock, unless something catastrophic happens to the company, that it would go down this much. And I think this is a pretty safe bet. Obviously, we're putting a lot of money on the line, but this is a relatively safe bet. You know, 180, 175, 195, 210. You know, the company is obviously worth a lot of money, and the share price, even with going down this much, is still only at 222. I mean, we look at the week, terrible week, down 15%. The month, down 19.3%. The 3-month, down 16.9%. The 1 year, only up 3.5%. For a company that has grown so much. That's why we're willing to take these risks. We're willing to put it out on the line to make about $5,000. I think it's worth it. And for something that's relatively safe as well, we have time on our side and we have strike price on our side. So based on these pure fundamentals and my analysis on it, I consider this a pretty good play. I consider Alibaba oversold and undervalued, and I think this is a great opportunity. Obviously, it sucks being down a lot of money today, as you guys can clearly see. If we go ahead and look at the portfolio, we're down about 2%, about $1,600 today. But this gave us a great opportunity, a really, really great opportunity to pick up some cheap Alibaba options and prepare ourselves well for the future. I like Alibaba. I'm in big. Let me know what you guys think below. Have a wonderful Christmas, guys. Bye.